If you feel like your business is making money, but there's never enough cash left over to actually invest to continue growing your business, you're not alone. We've worked with a lot of clients who have been in those shoes, and we've helped get them through. And so what I mean by this is like your business is making profits. You're actually doing well. Your revenue is growing, but you look at your bank account and you're like, we don't have enough cash to make this next hire, to make this investment in software, to take this next step to invest in product. And you're wondering, where is the money actually going? In this video, we're gonna walk through how to identify hidden leaks in your financials that might be costing you thousands of dollars and preventing you from investing in your business. I'm Roman Villar, founder of Full Send, and we help hundreds of businesses just like you recover cash that they're unexpectedly spending in areas that they're not aware of. All right, so the number one thing that we see in business financials today is actually related to owner spend. And what I mean by that is that owners, particularly LLC owners that make their money on distributions to themselves, end up draining their business of cash because they're actually over distributing the income. And so it's not just setting aside money for taxes, which should be done on a monthly or quarterly basis, but it's actually over distributing the net income of the business that starves the business of cash. And so we've seen this cycle happen repeatedly where lifestyle creep is a real thing. And when the owner continues to distribute money above and beyond what's actually generated from the business, it creates a really big problem for the business's operating expenses and reinvesting in the business to grow. So the first area to look is, what is the relative percentage of distributions that you're making of your net income? That will right there give you a really quick understanding of how much money do you actually have left over to reinvest in the business. So you have your net income, you want to reserve maybe 20% of that for taxes, set that to the side. The remainder is a distributable amount. However, the more that you distribute of that, the less that you actually have to reinvest in your business to grow. And this is a problem because this is where the leftover cash needs to go back into the business if you want to grow. Now, of course, you need to reserve cash left over to pay your bills and to fund your lifestyle. However, just understand the relationship between those two things. The next thing that we see is a really big red flag is your headcount costs stay the same. However, your software costs continue to rise month over month, year over year, and it's not controlled. It's not something that's monitored. And so this could result in maybe licenses or seats that you're paying for in softwares that you no longer need. Maybe it's softwares that you signed up for an annual subscription or a month-to-month subscription and you don't use it anymore. What happens is those costs continue to stack. The best thing that we've found to monitor tech spend like this is to utilize a card like a spend management platform like Ramp is one that we like a lot, not sponsored. We just love the Ramp product, and it helps you monitor your spend by vendor, by software, by department, by individual, so that you can really granularly make sure that you're not overspending in areas that you shouldn't be. The next thing that we see that is problematic for companies is effectively unbilled revenue. It's revenue leakage. So you're providing services, you're shipping product, and you're not actually invoicing for it. Or maybe you are invoicing for it, but it's 30 days later. You're not actually collecting cash in the time frame that's allowing you to reinvest in the business. Now, the revenue leakage in and of itself is a big problem. If you're a professional services company, you render services and then you don't actually bill for that on the back end. Maybe you forget, maybe it's not a part of your standardized process. That is dollars going out the door that you will not recover. On the late invoicing side, this is just a cash conversion issue where you're actually paying your team, you're paying software vendors to deliver a service, but you're not actually collecting cash until 30, 60, 90 days later even, which creates a really big cash crunch in the middle when you're waiting for that cash to come in. So you've got revenue leakage, you've got cash leakage, and you want to create a process that actually eliminates both of those things to enable you to capture the revenue and the cash when you're delivering the service or delivering that product. Alongside of that, revenue leakage and cash leakage, what happens particularly for service-based businesses is scope creep. And so your labor cost is going to be fixed, but scope creep is what's killing your margin. It's actually killing the amount of cash that you're able to bring home and reinvest into the business. And so what I mean by that is you got team members that may not necessarily have a full understanding of the scope of work that's being provided, and or they're just going above and beyond because they believe it's the right thing to do for the client, which it may be, but you need to make sure where the lines are to ensure that you're actually able to bill for the value that you're delivering and collect the revenue that you should be collecting. This is a really big hit on margin, particularly when that time can be spent in other revenue generating areas. This is where in professional services we like to call margin elasticity, which your margin can go up and down and fluctuate based on your team and how they allocate their time. Something to think about when reviewing your financials and relative to how your team's time is being spent. The fifth leakage that we often see is really just related to aged receivables. And what happens here is that you send out all your invoices, maybe you've got a solid process for invoicing, you get all of those out on time, but you don't have a great collectability rhythm. And so this revenue just goes out the door, these invoices go out the door, and you don't have a process to actually follow up on your customers to get paid. You just trust that they're gonna pay within 30 days, that says on the invoice. Or maybe they aren't clear on how to actually pay you. Maybe there's a link, but they don't know how to use a link. Maybe they say pay by check and a check is lost in the mail. You just have a really tight rhythm on invoicing and collections. Because the more that those collections linger and wait and pause, that might be revenue that you have to write off that you will never collect cash for. So you want to ensure that you don't have any leakage in your accounts receivable process and in your collection process. So what happens here is that these start as really small leaks. These are really small things that may be imperceptible on a month-to-month basis, but over time, these small leaks can sink really big ships. And so what we don't want to do is compound these small leaks into a really big problem. This is especially important for scaling businesses because you need cash to reinvest in the business to continue your momentum. If you have leakage, you will not be able to accomplish that moving forward. This is something that we help clients with all the time. We see it every single day. Here's an opportunity missed. Here's something you can look at. Here's software that you're overspending on. Here's how you can reallocate your cash to invest. Here's how much you should distribute to owners. Like, these are all things that we're thinking about. And so if this is something that you're struggling with, that you're thinking about, reach out to us. Send us a note at howdy@thefullsend.com. We're happy to help you. Go to our website. There's a tremendous amount of resources available to you at thefullsend.com. So I hope this is a helpful overview on how to stop some of this revenue leakage in your growth business. And I hope that this helps you as you continue to move forward to build a more sustainable and profitable business.